The crypto markets are on the cusp of a new era as we examine the bull case for Bitcoin and crypto. In today's video, you will find out why, because Bitcoin's history, in fact, has been defined by these periods of euphoric highs and sobering corrections, right? But for every lasting rally, there has been this underpinning of one simple thing: a structural shift in the way that the world engages with digital assets. In 2025, a perfect storm of regulatory breakthroughs, institutional adoption, and also just financial innovation is definitely reshaping the investment landscape. And this isn't just another upcycle, it could be the beginning of Bitcoin's most powerful run to date. Okay, so if you like the kind of content, make sure you check out the links down below and support. Right, so let's talk about these factors. The number one factor, in no particular order here, let's talk about the US regulations, the regulators being open to friendly policies towards crypto, and this just really opening the floodgates. For years, US policy and just that uncertainty has been a single largest barrier to institutional capital entering the crypto markets at scale. But that's changing now, of course, under Project Crypto. The CFTC has authorized spot crypto trading on registered futures exchange, which is a game changer for three reasons, right? So first is this compliance first infrastructure, meaning that hedge funds, pension funds, large asset managers can now trade Bitcoin and Ethereum without fear of falling afoul of regulators, right? And you've got a unified market access, allowing both futures and spot in one regulated venue, improving liquidity and price discovery. And then you have the onboarding speed, right, which is increasing as you see institutions plugging into existing exchange relationships rather than building bespoke crypto custody solutions from scratch. And for Bitcoin, this is a regulatory green light that Wall Street has been waiting for. The second thing to look at here is the SEC giving clarity, unlocking almost $70 billion of DeFi capital, right? The SEC has recently declared that liquid staking tokens are not securities, which removes a legal cloud that hung over DeFi staking for so many years. And it really matters for Bitcoin because these LSTs are primarily an Ethereum-based product. The ruling signals a broader regulatory willingness to distinguish between utility tokens and unregistered securities, right? So that precedent definitely strengthens the case for Bitcoin's status as a commodity that reduces legal risk for products built on top of BTC, including wrapped Bitcoin Lightning Network integrations and, of course, emerging yield strategies. The third thing we need to talk about here is tokenized stocks, which are bringing Wall Street to the blockchain, right? So when you look at platforms like Coinbase, Kraken, Robinhood, expanding into tokenized equities, letting investors trade traditional stocks as blockchain-based assets, right? This is more than just a novelty. It creates on-ramps for equity investors to interact with crypto infrastructure. It blurs the lines between TradFi and DeFi, with Bitcoin being positioned as the neutral settlement asset in a multi-asset digital ecosystem. It also supports 24/7 trading, making markets more global and less US-centric, right? So the takeaway there being Bitcoin is increasingly being part of the same conversation as blue chip equities, not just a speculative outlier, right? The fourth thing, when you look at the UK, which has been quite hostile towards crypto, I think they're starting to open the doors for regulated Bitcoin ETNs, right? So on October 5th this year, the UK Financial Conduct Authority will lift its ban on retail access to crypto ETNs, right? So enabling kind of investors to buy regulated Bitcoin and Ethereum notes on the London Stock Exchange, which is critical because it taps into the UK's deep pool of retail and advisory wealth. It also sets a precedent for other jurisdictions to adopt regulated exchange-listed crypto products without banning obviously the direct spot purchases, as well as normalizing Bitcoin as a portfolio asset alongside gold ETFs and index funds. Okay, so mainstream finance integrations are also coming to the fore, with JPMorgan Coinbase partnership, for example, letting millions of Chase customers buy Bitcoin with credit cards and even convert reward points into crypto. And this matters because really it's the type of frictionless integration that brings passive adopters into the market. Instead of requiring a dedicated onboarding journey, Bitcoin becomes an optional asset in everyday financial tools, right? So the sixth thing we can talk about here is the crypto summer, the IPO wave and institutional validation. Man, 2025 has been crazy. The IPO calendar is stacked with crypto native companies: Bullish, Galaxy Digital, Kraken, OKX, Gemini, eToro, Circle, all of these going public, fueling the bull case for public listing and demand of audited financials, governance, regulatory vetting, legitimizing the capital market infrastructure that is crypto. Institutional investors who buy these equities are now one step away from buying their Bitcoin itself as a portfolio hedge or a correlated play, right? The exchange IPOs historically coincide with market expansions. Think Coinbase in 2021 at the previous cycle's peak, and that liquidity phase, right? You've got Charles Schwab entering, it's really kind of a signpost for mass adoption here when you see the largest publicly traded investment broker in the US deciding to offer Bitcoin and Ethereum trading for custody, 20% of all exchange traded crypto assets. The message is clear. It's no longer a niche thing in crypto, right? It's a core product alongside stocks, bonds, ETFs. The firm's 1 million new accounts Q2 2025 could become the largest wave of compliant retail onboarding in crypto history. Schwab's existing wealth management infrastructure could also channel hundreds of billions of assets under management into BTC over the next decade. And I think if you look at the macro overview, the risk asset to reserve asset thing that's going on with Bitcoin is incredible. These developments aren't existing in isolation. Regulation is really reducing the risk for institutions. Mainstream tokenization integrations, reducing retail friction in terms of access, public listings, expanding into that digital gold narrative with all these companies that are now backing their balance sheets with Bitcoin. I think we are going to see something really, really incredible this crypto bull market cycle. We don't miss a thing. Make sure you tap in. Decentralized.news is the best place to be when you want to know what's going on in the digital asset space. Check out the links down below to check out a way you can trade and invest the best way, the best trading tools, the best crypto wallets, all things crypto. Decentralized.news.